Good morning, traders. Today is July the 22nd. My name is Neville Hornsey, market analyst with YouTrading, and today I'm going to be talking about the Canadian dollar and the oil markets. Okay, let's start with the YouTrading heat map, and you can see here that the British pound is currently the strongest of the currencies. And if we look to the Canadian dollar, that is pretty weak, as well as the New Zealand dollar. The Swiss franc is also weak, so it's not exactly a complete risk-off day. And if we look to the yen, it's a bank holiday for them, and that's trading mixed across the other pairs. So British pound versus the CAD would be a good trade if you were looking to go long today. If we look to the dollar CAD, we can see that the last couple of days have been quite bearish, and the 200 period moving average here in blue has acted as support yesterday, as well as the sort of 1.255 level. If you look left, there's this area balance that sort of formed in March 2021, which then broke down, gave us this lows. And then we did talk about the pattern, which is called the cup and handle. So you have the cup and the handle. And then if you were to get a Fibonacci extension, you could say that we've made a measured move up from the bottom of this part of the chart pattern. And if we were to get an extension, if like the 200 period moving average was to be support, then maybe we'll go up towards 1.3 for the 161.8 extension here. So that's still a possibility. If we go to the dollar index, you can see that the dollar is starting to rise after yesterday's sort of down move. Lots of things are going on in America at the moment. Last night, we didn't get the stimulus bill passed. The sort of Republicans and Democrats couldn't come to an agreement. So hopefully next week that happens. So there's no more stimulus necessarily coming into the markets today or this week. If we look to the oil markets, the last couple of days, we found support around $66 per barrel. I have got this rising trend line back from the sort of pandemic lows, April 2020. Then here we have another low, which I've marked as significant, from November. And then you can see that the price action that we saw post the UAE Saudi compromise from OPEC Plus, yeah, we saw like a big sell-off into that sort of support. But if we look left, we're just basically finding support in this balance area that formed between the March to I think it's May, yeah, March, May sort of OPEC meetings. The momentum, as described by the moving averages, shows that it's still rising. The price action itself, overall, if you were to go to a monthly, it's still bullish. We're still looking to take out the highs from 2018. Haven't quite done that really. On the daily though, this price market structure here made us high, took out a swing low, so we made a new low, made a lower swing high, and then a new swing low here. So until we get above the sort of July the 13th, 14th sort of swing high, I'm not particularly bullish. I do think we'll trade in this area for a while if we don't go any higher. The stochastic itself did confirm this as a new low. So this level here is around $70.50 could be the resistance. It's been support before. So I just don't think currently oil is in a particularly good place. I'll just get my notes. So refining inputs are down for 3 weeks in a row now. Crude exports are weakening. The build-in inventories was 2.1 million barrels, and that was unexpected. And there's rising oil imports for America. So, overall, this crude market is not exactly the most bullish in terms of fundamentals. And it's only this sort of rising trend momentum that is, for me at the moment, giving traders the buy the dip sort of mentality. I think if this becomes resistance around the $70 here, then I think we might even test a bit lower, maybe to the bottom of this range. I certainly want to go short because this balance area is, if prices do come down, it's going to be quite sticky, and the 200 period moving average is going to be a big roadblock as well. So in terms of oil, I don't want to be shorting it. I'm just not prepared to sort of recommend a long currently. So if we look at the British pound versus the CAD, like I said, the British pound is stronger today against the CAD as well as all the other sort of currencies. This is in a sort of range. I wouldn't want to take a trade here. Dollar CAD though, if we do get a rising dollar, then the 200 period moving average is acting as support, and your risk could be either below the 20 daily moving average here or the low from yesterday if you were to go long. But yeah, keep an eye on the dollar index, keep an eye on oil, and yeah, there might be a trade to be made in the dollar CAD. Okay, I hope that was useful, and I'll speak to you soon.